Hello, YouTube. Today we had the FOMC meeting minutes, and we want to ask ourselves what they said, why it matters, and where we're going to go from here because we got the CPI print coming in hot tomorrow. And we now have 6 consecutive red days in a row. We haven't done this very many times. It's actually quite rare to have 6 back-to-back red days. We did have 6 back-to-back red days going back to late September. We had 6 back-to-back here. And then otherwise, we have to go all the way back to 2021 or earlier to find this pattern. All this means is that it looks like history is starting to repeat itself in terms of the math, that stupid, pesky math stuff. So we talked about before how we had our false breakout, which means these blue boxes. And that was really predictable in terms of us going up and then us also going down. So if we continue the story of up roughly 6, down roughly 7, and then we get our dead cat bounce. Where are we now? Well, we're up by about 6, down by about 7 gets us down to our green line or our 50 monthly moving average. And then after that, we would expect a little bit of relief for us to go back up. Maybe where? Maybe the 200 weekly. So that's what happens if we're going to repeat the last leg of this pattern. It has been accurate enough for me to say that, hey, even if it doesn't repeat perfectly, I think that's okay. Keep in mind here that we did have 2 relief days, and then we had 5 back-to-back red, little bit of relief, and then 6 back-to-back red here. This is quite unusual. And the market's already very fearful, which means that I believe that if we're going to get a reaction like we got today on the PPI, I think that if we're going to get a bullish reaction tomorrow, it could be an oversized move higher. If we get a negative reaction, regardless of what the number is tomorrow, I think we could still go down. I just happen to think the delta, or meaning the change, is likely going to be a little bit less if we go down. I'll explain the reason why. We're already in extreme fear, which means that we've been scared for more than a year. If the market finds relief or a reason to go higher tomorrow, it probably will, and it'll overshoot higher like it has every other time. When we look at the most important data points for the week, are the ones that have the stars. It was the Fed minutes, and then CPI tomorrow. PPI did come in pre-market at 8:30, and Christine Lagarde also spoke. This one pretty much didn't move the market at all. Christine Lagarde, I thought it would. It didn't. And then at 8:30, where's the meeting minutes here for today? I had my filter in. Oh, what happened here? Anyways, looking to what happened for the US, our PPI came in at 0.4%, which is a 100% miss, which means it was 100% higher than 0.2. What did the market do? It opened green. Yesterday, we closed at 357.74. Today, we opened at 358.17, about 40 cents or 0.1% higher. Whoa, what happened? Isn't good news bad? Yeah, good news has been bad. And that's why it's so interesting, because if we're getting a positive reaction to what would normally be interpreted as bearish, like what's going on here? It's really interesting. And it's really interesting because as we look forward to our number on Friday with CPI, we're actually expecting a number to come down. So if we beat by 100% on PPI, and we only went down until the end of the day because of options. We'll talk about that after. Today is Wednesday. No surprise. We got our red Wednesday. FOMC meeting minutes. We'll talk about that now. So FOMC meeting minutes, we were told that Fed officials expect higher rates to stay in place. Meeting minutes show. Fed plans to continue to tighten despite slowing labor market. Why did the market not really move? Because we've already priced a lot of this in. We hit our, we actually hit a fresh 52-week closing basis low today. Because last week when we closed it, when we closed out the end of the month on the 30th, our low and our close is at 357.18. Today we closed at 356.56, which means this is our weakest close so far in the last 52 weeks. But it's not a lower low. Yesterday we went down 355.71. Today we got 356.70, roughly 60 cent higher low, and a lower high, which means an inside bar. Inside bar with less volume, and volume not really seen since when? Since we go back to that 6 back-to-back red day area. Yep, that's what's so interesting about this. So as the market is oversold and we've largely priced in what Fed officials are doing and saying, I think a lot of this is related to options. So if a lot of it is related to options, but the technicals are what we really matter, what we really care about. We care about the news. We care more about the reaction. So now let's zoom in and see if there's a little bit more of clues here, because we're due for relief. Again, the math works out. The pattern works out. But are there some warning signs here that maybe the bears are really just testing these bulls before they pull the rug out? I think there's evidence for it. If I look here, I would know to have a red, uh, pink and white, and a green line. These come from weekly levels, but we're going to focus on green being support and red being resistance. So what happened this week? Well, we have an inverted hammer or a rejection on a gap fill to the red line. Then we got a rejection here on the white line. Then we got a rejection here on another inverted hammer on the pink line. What does that mean? Every time we find ourselves in an area where we should find sellers, we do every single time. Every time we find sellers, which either means that they're slowly walking it down before they just pull the rug out and we have a massive drop, or they're just not really able to take it. So we're finding sellers right where we would expect to, but we're also finding buyers where we would expect to, which means what? We got lower wicks and we also have upper wicks. So yeah, it's really wicky. It's a really wicky market. And that's because everyone's positioning for what's going to happen tomorrow. And this is so important because when we look at QQQ as well, it's already like deeply oversold. 6 back-to-back red days as well. If I go to hollow candles, which will show us the red, 1, 2, 3, 4, 5, 6. Yeah, it's nasty. It's bloody. And all it means is that we're like already repeating a large part of the pattern. If you note here, when I just adjust the chart to be automatic, where are we? Well, we're in the black dirt dungeon. We're not in blue sky breakouts, which is all the way up here. We're in the dungeon. We're in the black dirt breakdown. That's not good at all. So as we look here, we're now where? Several days below our 200 weekly, and now 3 consecutive daily closes below our 50 monthly. And where is this thing rejecting to? Ah, crap, right? Rejected here on the red line, rejected here on the pink line, rejected here on the green line, which means a rejection off the 200 weekly. Sorry. First one was a rejection off of our June low, which is going to be the red line. Let me just pull it up here. So the red line corresponds with our June low, sorry, our May low, which was carved out below before the S&P. And then we reject off the 200 weekly and the 50 monthly. Oh yeah, kumbaya, right? Bulls are in control right now. Let's hold hands and go into the promised land. Oh no. So even for QQQ, we're due for relief. And I say that because we're at the bottom of the pattern. We either need a fresh wave of volume, or what I see in terms of a technical setup is a mountain. The mountain means we have capitulation already in if we can push off from here. So I'm paying really close attention to this. I also want to give a big thank you to everyone who supports our channel for getting us to 10,000 overnight. Thank you so much. If you go to our community tab, I put a post here saying thank you. And we're going to do a prize draw giveaway on our Friday stream. Make sure to go comment inside of the thread if you want to qualify for that. So thank you so much. And we will celebrate when we get to 25,000 next. So the last thing I just want to look at here is going to be options, because options really provided a big clue for today. So if we're doing what we would normally expect, well, yeah, they managed to burn basically all these puts. On the call sides, none of them got paid out, not a single one. There's open interest for the puts for the bears as well, which means, yeah, they were really motivated and they weren't able to actually drill us down to break that inside bar bear. As I look here to the final thing, which is going to be for the options chain for SPY going into Friday, there's a lot of open interest. So we look here to 360 down to 350, ton of volume, lots of open interest, which means they're either holding this up, propping it up to buy these things back before they ultimately go in the money or we go lower, or they're just going to walk it back up to 360 where max pain is, because there's no open interest for calls, and there's open interest and volume here for puts. If we get it back to 360, that is max pain. With that said, thank you so much for watching. I look forward to seeing you tomorrow. And if not, watch the video now that'll keep up in a moment in regards to the weekend deep dive, how we got here, where we're likely to go, and all that good jazz. Thanks so much. Look forward to seeing you tomorrow.